Good afternoon. This is Mike Bertelsen, the Bear Market Investor. The market update for the 21st of August, 2011. We're here looking at the S&P 500 stock index in the daily time frame. We're going to be looking at the intraday charts as well. Now, let me urge you, if you have not already done so, please do watch the videos that I produced on Sunday and Monday of last week. Very, very important. I go into the big picture on the S&P 500 and the volatility index, showing you chart work that is original to me that you will not see anywhere else. And I'm doing it for free. The only thing that I ask is that please subscribe to the YouTube channel. If you have not already done so, please do comment on the video if you have not already done so. Please do show me that it's worthwhile in doing these videos, I guess is what I'm trying to say. In any case, if I can really encourage you guys in the end to go out there and do your own chart work and present your own charts there on the internet, just as I'm doing here, then I've done my work. I'm just trying to promote technical analysis. In any case, what we were able to do was identify the top of our ABC correction from the March 2009 lows that I consider a bear market rally to be this point right here. Many Elliotticians have misidentified, I believe, the top to be this point right here. The problem with that is that the wave structure does not agree with it. I believe what we had was a 3, 3, 5 running flat correction, in which the fourth wave actually terminated at this point right here. From there, we had a 1, 2, 3, 4, 5 waves to the upside to complete the fifth wave of C. Now, it didn't have to go beyond this point. I thought it probably would, but it didn't have to. It really had to go beyond the third wave of the third wave termination point in order to be really considered a proper fifth wave. And it did in fact do that. It moved ever so slightly beyond this peak right here before turning back down. This marks the top of that counter trend rally that erupted from the March 2009 low. From here we had a first wave down, second wave up, third wave down, fourth wave up, and then we are currently working on our fifth wave, I believe. Now, there are other possibilities that suggest that we could actually move sideways in a triangle or some sort of flat correction. That remains to be seen. However, it is possible, and that's why I want to note that if we don't see exactly what we think should happen occur, it's only because then probably we're in some sort of flat correction and we will break below this low right here. So ultimately what needs to happen is, assuming we're in a fifth wave here already, we need to take out this low right here, proceed somewhat lower, but we at least need to break this low. Now there's a few areas of support that I've identified in the prior videos, I think even in the YouTube comments section, that we could actually come back down to in between here and here to find that strong area of support. Now again, we don't necessarily have to move all the way down there, but based on the intraday wave structure that I'm going to be showing you in a moment, it is at least a possibility. So now that said, I want to actually show you here the indicators that we have. As far as the momentum is concerned, we are continuing to carve out what will probably become a bullish divergence, and will usher in that counter trend rally that I was talking about. As once we complete these first small 5 waves down, we will enter into the counter trend bounce. The counter trend bounce will end up retracing a portion of this entire decline once it finishes or terminates. And once we move below this low right here, we will have our bullish divergence. So, the counter trend bounce has to end at least within the territory of the fourth wave of lesser degree. That means between here and here, but can also extend beyond that. It can extend to other wave structures or other retracement values above that or beyond that. So we'll have to wait and see. Now, generally speaking, second waves, especially in environments like this, can be pretty sharp and pretty dramatic. And especially coming right off of a peak here, like we just did, it would not be surprising to me at all to see a very strong counter trend bounce that retraces between 50 and 61.8%, perhaps even higher, of the entire decline. However, as I noted, it just has to get between here and here, but it could extend beyond that. We'll just wait and see, once we get that, what the wave structure looks like, and that will give us an indication as to when the top of the rally might come. So once we finish this fifth wave down here and move beyond the prior low here, I will probably close my short positions at that point and wait for a new entry point. I'm not going to play the upside swing. Even though it could be fairly profitable if you wanted to do it, doing so in an environment like this is generally considered fairly dangerous because of the fact that you can have extremely wild swings, and really, as I had noted, just moving between here and here fulfills that requirement. And in the case of this fourth wave right here, you can see we barely pushed beyond the 38.2% retracement before finding that peak in the fourth wave, assuming we did now terminate that fourth wave and aren't in a triangle or something else. So let's go ahead and have a look at our other indicators here. Stochastic is probably going to carve out a divergence here as well. Once we move to a new low, we probably will see the stochastic in this oversold territory, but not as deep as it was before. Perhaps the same goes with the RSI. From there, all of these indicators suggest we will have a pretty potent rally erupt, which shorts do not want to be caught in. But you do want to be careful there again, because it is not exactly predictable as to how high that will go, but it probably will at least get into here, if not a little bit exceed it. I just want to see that wave structure breakdown once we get to that point. Now let's have a look at our intraday charts. Okay, we're looking at the 50-minute chart of the S&P 500 stock index, and what you can't see is what's slightly above this right here, because those trend lines disappeared. But that was that blue trend line that I was talking about, going all the way back to the 2000 peak in the S&P 500 stock index, and that was exactly at this level right here. That is what we were repelled against, or repelled off of, and from there we came down in a first wave down, second wave up, third wave down, fourth wave up, and I believe fifth wave terminated here in an ending diagonal. However, there is at least a possibility that this completed the fourth wave right here. However, based on my analysis, if this were to be considered a second wave up here, this being the first wave down, this would fit the criteria. In other words, we have to move into the price territory at least of the fourth wave of lesser degree, which means it terminates between here or slightly higher. In this case it did. It terminated slightly higher. And from there we came down, and we were continuing down through the end of the day on Friday. Now this could be the beginning of the third wave, and we could see potentially much more downside on Monday. But again, there are variations on whether or not you consider this the termination point of the five waves or this. So let's wait and see what happens, how this wave structure continues to materialize. I will certainly continue to post on the YouTube comments section if I'm unable to make a video. Now, if you would, please do rate the video or comment on it. And if you are not currently a subscriber, please do so. I really love to see that people are following what I'm doing, so that it just continues to motivate me to do so. And if you know other people that would be interested in this analysis, please do forward this YouTube channel onto them and let them have a look at it themselves. In any case, have a great weekend, or rest of the weekend here. It's actually nighttime on Sunday here, so hope you have a chance to view this before Monday on the opening. But in any case, have a great rest of the weekend, and more to come next week.